breakout, essentially, or the 15-minute breakout. So if we have a 15-minute low, sorry, a 15-minute high up here, so I'll put that in red. If we have a 15-minute high and we have a 15-minute low, what we're seeing, or what was going through my mind, there's a few things that are going through my mind, right? So first, over here, we've already established we had these aggressive sellers over here failing. So what's really happening here is that there are passive buyers. That's what's going on, right? Passive buyers. Now, for those who don't understand passive buyers, I'm just going to quickly break that down because I do get questions on this as well. So from a footprint chart again, now the numbers you see on a footprint chart, these are only aggressive participants or market orders, right? So if we just break down a couple of things over here, if we see 67 for 18, that means that there's 67 sell orders, right? Aggressive sell orders, and there's only 18 buy orders, right? Market buy orders or aggressive buy orders, right? Now, again, there's 45 for 0. That means the same thing. There's 45 market participants going in to sell at market prices, aggressively looking to sell. And there's no market participants looking to buy. So this is at 69.61. Roughly 69.62 area. So that represents this region. So when we see a lot of aggressive or market participants resting in this region, right, but the market breaks higher, these sell orders are being absorbed or they're being trapped. By who, right? They're being trapped by these passive buyers. So the next logical step is when we come into this zone, when we reject off this zone over here, right? Either we reject higher or we continue to crash lower and then re-break the zone, right? So again, the most important thing is having a zone and understanding what to look for inside the zone, right? So this was my kind of execution criteria. So again, what got me interested was this wick, right? So a lot of traders will use a wick, but they won't have any confirmation as to whether to go long and short with that wick. So typically a wick is not enough. Using a 15-minute opening range breakout is not enough, right? You need to see whether there's passive buyers in this region. Now, how we do that is by understanding what was going on in this level and just outside the level. So just this entire region over here, right? This is where I was looking to execute, and I did execute a long position, right? So my execution again for that day or that Friday was 69.72, right? That was my execution, 69.72. So if we go to 69.72, a little bit late actually, I should have executed down here, but 69.72.5 stops just above this wick, and I was basically looking to target the top of this zone over here, right? Roughly a 1 to 1.5 risk reward, right? So